Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. All of these videos are short updates to let you know what's going on in the markets, in this case over the last 3 months. And they all follow on to the Coming Storm video, which we put out 2 years ago, which gives you a big picture of what is happening in the world, in the economy. We're living through changes that are unprecedented, and if you watch that video, you'll see that a lot of what we predicted 2 years ago has come to pass, but the really biggest things haven't happened yet, so you do still have time to prepare for that. I recommend you go and watch that. But anyways, I'm going to jump into the gold and silver video. There's a lot of information, I think, in these 2 videos I'm going to do on manipulation. The gold price dropped before and after the Swiss franc devaluation. That's counter to any logic. There's so many things that the people that are manipulating the price, and if you haven't seen any of these videos by me or someone else explaining how the gold and silver prices are manipulated, I apologize for starting that way. Maybe you'll kind of catch up along the way, or go back and watch some other videos. But the movement in the prices is counter to any logic, and that's done quite on purpose so that people don't feel safe and secure in those metals as they should. Logic would tell you, all of history would tell you, that is what should be the safe thing. It should go up in the case of Swiss purposely devaluing their franc. Instead, the price was hammered around that time just so people feel uneasy and move into the US dollar, or the euro, something else. Bank gold lending has been up big in the last few months, so it's maybe a combination of 2 things. It could be some people legitimately just desperate for liquidity and trying to raise cash anywhere they can. So they're actually accepting negative return. They're actually paying to lend the money out just to get cash to do other things with. But we know, it's well documented, that also the central banks, the bullion banks, are involved in doing that with official gold so that it can suppress the price and also hopefully support the value of their paper currencies. Divergence in the metals stock is showing. So for some time, metals equities have gone up and down with the general stock market, the S&P or the Dow or the NASDAQ, the FTSE. I mean, generally the markets are kind of moving in sync with each other. And gold and silver equities have done the same thing. But lately we've seen, not every day, but on certain days, they've moved powerfully in the different direction. So that might be a sign that they're ready to break out. Stephen Lieb shared the IMF numbers. The U.S. gold now stands at 20% of the monetary base. So a lot of people think we're in a gold bubble. But U.S. gold is right now 20% of our monetary base. In 1980, which was the last peak of gold, it stood at 120% of the monetary base. So we're at 20%. We're at 1/6 of that at this point because of all the money that's been printed. To get back to 100%, gold would need to equal to $10,000. Gold basically has not kept up with inflation. Inflation means the printing of money, so the more money there is, that's the definition of inflation. Of course, the cause of that is often higher prices, which always ends up happening when you have more money. But the straight definition of inflation is the amount of money that's created. And so gold price has not come up with that. Even though over the last 10 years it's gone up pretty dramatically, it hasn't gone up nearly as much as all the money that's been printed. Dylan Grice came up with the same $10,000 number. I've seen a bunch of people, it'll probably come up again in one of these, that have come up with this $10,000 number. I mean, it's a little bit academic to come up with that kind of a number. I've come up with a number before for my clients. But the point is, gold is, even though it's gone up a lot, drastically undervalued to the amount of paper assets that are out there. I hate to even call it paper assets, but we'll leave it at that. There has been some interesting talk of gold becoming a Basel III Tier 1 asset, which would be awesome for the price of gold. It would mean huge demand from all the banks if that were to happen, particularly with interest rates as low as they are. France banned the cash sales of gold and silver over $600, so they want to basically document, chart, follow everyone that owns gold and silver. CME Group, they're very much complicit with JP Morgan in the manipulation of gold and silver prices. They raised margins on gold and silver multiple times in the last few months in falling markets. That is never the way that when margins are hiked. Margins are hiked, margin requirements are hiked legitimately when markets are running up too much because there's more risk in the market when it's running up. When it's going down, that makes no sense. That's not normally the way it's done. But against gold and silver, it was done. China and India consume half the world's gold production each year and are steadily increasing, while production is stagnant. Meanwhile, the West is waking up, and central banks are also starting to buy. So you're seeing more and more buying from all these important areas. It used to be kind of only what the West bought was important, but now Asia is buying massively. And so, unfortunately, if you like to see the West strong and powerful and rich, the real money of the world is moving from the West to the East. Or you could look at it like it's fortunate because that's what's happening. This kind of a shift of what's going on. Let's see. The physical buying resulted in higher premiums and shortages in gold and silver while prices dropped. Again, so this is another thing that defies all logic, and it's another proof that prices are being manipulated. If prices are dropping, you would think that it's because there's not much demand. People don't really want the gold and silver. More people want to sell it than want to buy it. That would be a normal, economics 101, supply and demand. What happened in reality is the price is dropping dramatically and people are rushing out to buy the actual physical silver. So obviously on the paper market there's more sellers than buyers, and that's what's pushing the price down. But the paper market, as we've explained many times, is totally divorced from the actual physical market. So you have the governments and the big bullion banks that are consorting together to push the price down, and then you have the general public, which includes people like you that are kind of wise to what's going on and buying, and then you have all of Asia who says, fine, wonderful, you're going to push the price down for me? I will buy as much as I can at that price. And so that's what's happening. They're buying. You can see the premiums of the actual metals going up in physical because people can't get as much. There's shortages. People are wanting more and more of the metal, and yet the paper market is showing the price dropping. So that's just a crazy world we live in. That can only last so long, though, because eventually the paper market has to represent the real metal. If there's absolutely no metal to be found and the paper market is still there, then the whole system will break, and the shorts on the paper market will have to cover, and the price will go through the roof. If gold and silver sellers wanted the best price, they would sell major markets are open. So what's been happening a lot of times when these huge drops in the price happen is they start at nighttime when there's really no markets in the world open, only over-the-counter, off-peak times when most people are at home with their families. That's when you start to see the market crash. Well, if you had to sell a large amount of gold, silver, or anything else, you wouldn't bring it to a market where there's no one there to buy because you'd want to get the highest price possible. So you would come where there's the most amount of buyers. You'd wait until the next day, in the middle of the day, when you could sell it to the most amount of buyers. That way you get the highest price. That's not what's happening. These huge sellers are showing up in the middle of the night when no one is watching, no one is trading, there's no buyers, and they're selling into the market. This ensures they get the worst possible price. It ensures that they push the price down and down and down because there's no buyers to match the orders. And so when the next, as the earth turns, the next market opens, the price is now way lower, and that's where trading starts in that new market. This is the one way that they're able to do this, and you can watch it on the charts. No one in their right mind would sell that way if they truly were motivated by profit. These sellers aren't motivated by profit. It shows clearly that they're manipulating. I feel like I've covered this topic, so I'm not trying to prove manipulation because it's already proven, but I guess that's what I'm doing. And let's see. So here's the good news. All that being said, right now, bullion banks' short position is really very historically low compared to where they are at some certain points. because I just explained how they sell and sell and sell. Well, once they create panic in the market and everyone's selling and the price gets low, well, then they're the biggest buyers. They turn around and they're buying, buying, buying. So overall, their short position is really pretty low, and the market is so confused that it's very bearish. And so there's an incredible position. Silver looks fantastic. Gold looks pretty decent from that respect. Doesn't mean it can't go down tomorrow, but over the long haul, we're sitting in a great position to be a buyer of those two things. Fourth consecutive year of record-breaking Silver Eagle sales. More Indians are buying bullion instead of jewelry. So the women are still buying jewelry, but a lot of the men are starting to realize that they should be buying too, and so they're buying a lot more bullion. The CFTC did announce a position limit rule, so this is fantastic. I don't think they've gone into effect yet. They still have to do some more things. 4,500 contracts, I think it's 3 times bigger than what most of the public was asking for, but that's still only 1/3 the size of JP Morgan's short position of silver. So if this does take effect, JP Morgan is going to have to reduce by 2/3 their short in the silver market. So that's pretty fantastic news. If that goes into effect, then that should be very bullish. Multiple people have analyzed the correct gold price lately and come to 10,000. I already kind of covered that. Another way to look at that price, I gave a different rationale. Different people have come to this different number, but it's been interesting to see all the different ways they've come to it. But the last time the smartest economists of the world got together and figured out a global financial system, an economic system, it was Bretton Woods, and they came up with a number for the US dollar and gold, and that was $35 per ounce. Well, if you use the same formula that they used back then you would come up with $10,000 an ounce right now. So it's not some like harebrained scheme. The last time they all got together and came up with a steady, secure system for a world reserve currency. If you use the same formula they used, it's $10,000 an ounce. So it gives you an idea that $1,800 gold is not nearly as expensive as it might seem. I've got another video, maybe 2. I'm going to break up the next one. But thank you for watching. Hope you appreciate it.